So what is good debt? What is bad debt? So good debt typically would be something that is either tax deductible or is the purchase of something which has got the capacity to appreciate in value, like your primary place of residence, for example, because you've used that money to buy an asset, which over time is very likely to appreciate. So whatever you've borrowed will eclipse versus what the value of that asset is.
Gotcha.
Alternatively, as I say, if you've got something that's a tax deductible, that is construed to be good debt. If you've got HEX debt, technically speaking, if you've gone to university to apply and learn skills, it should enable you to be worth more when you come into the workforce. Therefore, you should earn more. Therefore, that debt that you accumulated actually is something that's purchased you a higher position up the totem pole of income when you start working. I guess one of the challenges for that is where people have, got into debt to go and study something very, very obscure, which doesn't really have any commercial value, and that's a slightly different scenario. Hey guys, welcome to this week's Money and Investing Show, where we are looking at 5 red flags for financial security that you cannot afford to ignore. There's an awful lot to take out of this, some very big practical tips, and most importantly, a simple pathway to make sure that you avoid the pain that can come from ignoring these flags. As always, make sure you take plenty of notes, but most importantly, make sure you take plenty of action. See you in the show. Hey guys, welcome to this week's Money and Investing Show with me, your host, Andrew Baxter, and as always, my offsider and co-host, Mitchell Olarenshaw.
Good to be here, Mr. B. Now, topic of conversation's an interesting one today. We've often been accompanied to red flags, probably in our dating and bachelor lives, but in fact, we're going to be talking about red flags in a very different sense today, and that's in the financial space.
I'm going to red flag your segues. They were getting really good this year.
I thought that one was good.
Wasn't bad.
Relatable.
I guess it is.
Pertinent.
For yourself.
Yeah, thanks. In any case, we're going to talk about the 5 biggest financial red flags that you should be avoiding. Now, some of these will be things that you might be doing a little bit of, or you've done some of, but they're also very easy to fall victim to.
You're right. And I think if you think about it, there's like a grade. You might have 1 of these, maybe 2. If you're demonstrating symptoms of 3, 4, or even not, or 5 of these, you've got a real problem. So it's like a progressively ramping series of challenges that you're facing. And I guess this is quite timely because we're into the new year now, and a lot of people would have enjoyed a wholesome Christmas, and the credit card bills come through. And all of a sudden, the financial plan is maybe a little bit on the back foot or even underwater to that which you set out at the start of the year. So very timely to be looking at this, and hope it helps a lot of people.
Yeah, I think it can also be preventative too. So if you're listening to this saying, well, I don't have any of these red flags, I'm not doing any of these, none of my family members are doing them, my spouse isn't, but at least almost seeing what not to do is a good way to do the opposite to do, right. If you know what I mean.
And these things stick together. They're a contagious thing. So if this is you, your chances are your little peer group are in the same position, and it might be something that you've inherited from family and or other people that you associate with too. So good sort of check on then to ask yourself, well, who you're hanging around with if you're exhibiting these symptoms, and are they passing those behaviors onto you that is causing your financial demise?
All right. Well, let's raise the red flag then in that case.
Start the obvious one. Hey, spending more than you earn.
Oh, yeah. I mean, admittedly, I've done it before, particularly early days when I was a uni student. You just work your way back to zero, and every week you live paycheck to paycheck. That, though, as an adult, particularly if you've got a spouse and a family, can become very troublesome.
Look, it is, and it points to probably one of the biggest things we'll get into on here, which is around budgeting, and we'll dive deeper on that. There are times in your life where there's going to be a call on the income you have that's urgent and important, and you don't necessarily get a lot of choice around that, and that may cause you to spend more than what you earn. That's life. Sometimes there are those bumps in the road that come along. But when it becomes something that's systemic, where week in, week out, or month in, month out, that's an ongoing pattern, that's where there's a real problem. So there's a distinction there. If you've had to dip in and go underwater, I'll give you a very good example. I talk about it in my book. As a matter of fact, when I first bought my house in London, my gas boiler blew up. And middle of winter, and so all my heating, all my hot water and everything was off of that. And to get the British Gas, notoriously inefficient in terms of what they do, you could pay a premium to get shortlisted on a call and have someone come out more urgently, rather than it just being, this is urgent and important. They just say, yeah, we'll charge you if you want us to come out, which you've got very little choice in. So out they came, and it was like, yeah, your boiler's gone, it needs totally new plumbing put in. It's going to be, I don't know, I can't remember what it was now, like it says £2,000, which when I've just bought a house in London and all my money is getting sucked into my mortgage and everything that goes alongside that, didn't have the cash. So for that period of time, my outgoings were very much more than what my income was. And so that's an example of a special situation knocking things over the line. Maybe a different example would be car's broken down. You need your car to get to work. You might have had to have spent more than you earned for a period of time to get that car roadworthy to go back to work again. So, there are examples that can come along and trip us up, but they're quite different from having that habitual out of money at the end of the month because you've gone out or bought clothes or done things that are more discretionary, shall we say, with your money.
Yeah, many years ago, I'll give a personal anecdote on that. I was still at uni. It was Christmas time, and I'd pretty much, I wasn't working at the time. I was on uni break and work break and whatever else. And I had to buy my girlfriend at the time a Christmas present. So I had to say to Mum, can I please have a $250 loan so I can purchase this necklace or whatever it was? And that was a situation where I'd gone hard over Christmas, run out of money, couldn't meet the obligation that I had, which was to get a present, and had to ask Mum for a loan. Now that's
what sort of interest did Sue hit you up on that? I can't imagine mother-son loan. Is it interest bearing or non-interest bearing?
Non-interest bearing, but I had to make my bed. So Italian mama always looked after me. That was the deal. So had to pull my finger out for a little bit. But it's an example of I was sucked into the moment where it was no matter what I was going to buy this present at the time. Now I'm not even with that person anymore, so it doesn't mean anything. But it's a habit that we all fall into from time to time.
It's very easily done, and it's called life. As I say, the key thing is to spot the systemic challenge. And if it's something that's happening all the time, there's a bigger problem, which I guess we'll get to in a moment. So how do you do that? We'll get to that in a couple of moments' time.
All right. Let's talk about the extension of spending more than you earn, because I would say that financial red flag number 2 is only having bad debt, not good debt. We can talk about the difference between the two in a moment. One is far better than the other, as we know.
Yep, all debt is not the same. And I remember my father's sort of ringing endorsement in life: never have any debt. If you owe somebody money, they own you. You don't own the asset. You don't own your life. They own you. And that's always rung true with me. But that said, as I guess I've become my own man, so to speak, you start to understand debt a little bit more. And I still have an aversion to debt, which I can firmly lay at the feet of my dad. But it's also been very good to me. I don't have debt. I haven't had debt for years and years. It's a great way to be able to live. And I'm very fortunate, I think, to be in that position. So what is good debt? What is bad debt? So good debt typically would be something that is either tax deductible or is the purchase of something which has got the capacity to appreciate in value, like your primary place of residence, for example, because you've used that money to buy an asset, which over time is very likely to appreciate. So whatever you've borrowed will eclipse versus what the value of that asset is.
Gotcha.
Alternatively, as I say, if you've got something that's a tax deductible, that is construed to be good debt. If you've got HEX debt, technically speaking, if you've gone to university to apply and learn skills, it should enable you to be worth more when you come into the workforce. Therefore, you should earn more. Therefore, that debt that you accumulated actually is something that's purchased you a higher position up the totem pole of income when you start working. I guess one of the challenges for that is where people have got into debt to go and study something very, very obscure, which doesn't really have any commercial value, and that's a slightly different scenario. So there are examples of good debt. Bad debt: credit card, buy now, pay later, car loan,
personal
loan, and any and all of the above. Not good things, because effectively it's something they've used to purchase a thing that is not necessarily either income producing or an asset that you effectively have. A car, you think, oh, car's an asset. No, it's not. It's a depreciating piece of metal, and it's costing you interest to buy something that's going to be worth far less at the end of the process than what it was when you started. Hence, again, in the book, we say, drive the cheapest car your ego will allow you to get away with.
We've both fallen victim of that, I can say for sure. So just
got to have some weaknesses, and tax deductible because in the corporate structure.
Correct, absolutely, for us. And I guess the deciphering difference here is that good debt you can earn a return on effectively, whereas bad debt you can't. So if you're in a situation where you're spending far more than you're earning to keep up with that spending, which is a poor financial habit, usually you're going to have to take out more credit cards or a bigger interest debt, borrow money and whatnot.
Yep.
That's a very challenging cycle to be a part of.
It is, and it's a nemesis for so many people. I think, access to credit is so freely available. Everyone wants to throw money at you, and you've got to ask yourself the question, if someone's throwing a big benefit like money at you, who's the commodity in that transaction? It's effectively you. You're the product. And so, be very, very minded of that, because it is a very slippery slope when you hop into it. Now, there's nothing wrong with having credit cards. We were just talking about that off camera when we were doing the sound check just previously. If you have a credit card, card and you're able to pay the balance off in full each month, you're not accumulating any interest or any charges or penalties there, effectively that could be 45, 50 days of interest-free credit that you're actually getting, which is very useful if you've the discipline to manage it. Where it becomes a problem is if you're starting to move backwards and you're unable to meet those payments for various reasons. And that's where, the compounding of interest in the high teens, early 20s is, it's like getting slugged over the head with a baseball bat. It's very, very hard to break free financially there. So you've got to have a level of discipline if you're going to use those things. And again, the litmus test, do you need it or do you want it at the point of purchase, is something that's very, very important to consider. And also some advice from one of my mentors many, many years ago, Robert Kiyosaki. Whenever you buy a lifestyle, he always calls it a lifestyle asset, but whether it's an asset or not is a question mark. But if you're buying something that's a chichka, something that's shiny, a reward or something like that, buy it out of the proceeds of your investing, not out of your principal. That way the principal can continue working for you, but you're giving yourself some color from the return on that, which is likely to encourage you to invest more as opposed to depleting the money you have to invest in.
Yeah.
Bit of a high level thing when you're going week to week, and it's so hard to see people dig themselves out of debt, and Afterpay and buy now, pay later is a true nemesis. A bad thing, I think, for people's financial health. It's availability of credit to buy stuff they don't want too easily without any major consequences until you slide behind the 8 ball, and then the consequences are really quite savage.
Yeah. And every now and then it can be that once-off big purchase that you made that you didn't really need. Do you really need that new MacBook Pro, which is $4,000? I heard a good one not too long ago, which is if you're going to spend more than 1% of your net worth in a transaction, sleep on it for 2 nights before you do it. Now, that will differ for everyone. That could be very large or very small. Either way, it's on a relative basis, right? Sleep on it first. Do you really need it? Do you really want it?
Yeah, I think that's a really sage. You could different analysis or analogy for it is like if you're having a fight with somebody, spend 3 seconds before you open your mouth thinking about what you want to say. Same thing. It stops you making a lot of big blunders. And I think taking a bit of time out to really evaluate if it's something that genuinely adds value. What's your motivation for wanting to buy it? If it's ego, peer pressure, or acceptance in the group of people you're in, it's a hard no. You need to understand your decision making better than that. And I know this sounds like we're being the fun police, but my goal for everyday Australians is very, very simple. It's what gets me out of bed in the morning, and that's to help them have a life of financial abundance, to have a life of financial security without financial pain, and these are building blocks in that.
Yeah, absolutely. I think for anyone listening to this, if you are in a situation where you're not sure if you've got good debt or bad debt or what the ratio of one to the other is, do an audit of your balance sheet, look at your bank account, look at your loans, and see what you've actually got on paper.
Very true. And it's going to be quite different to what you think.
I would say so. There'd be some scary surprises in there. Moving forward now to number 3, major red flag, not having a budget. Pretty straightforward, right?
We talked in the first instance, first talking point today was spending more than you earn, and this is budgeting 101. Getting your money in the door is one thing, knowing what you get in the door. You might know what you get, you might not. And I guess it's one of those things you've got to know the numbers if you want to be successful with really anything in life. So knowing what you're getting in the door after tax and then breaking down where that money actually goes. So doing a journal or a budget to say, this is what I earn and this is what I spend is a very, very good way to start to get a grip on where the money that you're earning actually goes. And the biggest one for most people, particularly here in Australia right now, is likely to be accommodation, whether that be a mortgage or whether it be rent. It's going to be one of the largest ones. Second to that would be food, and the third one on there would probably be fuel and energy. And you put those things together to an extent. Fuel and energy, that's your electric bill, your fuel for your car. They're going to be largely fixed costs, so you can allocate an amount each month and portion that to the side. Your mortgage or your rent is going to be a fixed cost, so you can carve out a little bit of that. The food one is really interesting, and that's where we've seen more and more people are spending more and more on food, and it's not because food prices have gone up, it's the nature of the kind of food that they're accessing. So instead of going to the supermarket and buying groceries, they're buying value-added services down the line, whether that be Uber Eats and delivery services of food, going out for dinner more, picking up takeaway where you're paying a premium for somebody else to cook that food for you. The net benefit to you is you're still getting food, but you're actually paying more for it. So that's an area that a lot of people can, I guess, make some inroads in their budget, and just seeing where your dough goes each and every day is a revelation. And if you use your card for a week in a month, maybe it's a debit card, and you can see that itemized expense, break it down and see what you're spending. how much you spend on breakfast on the way to work instead of having, some porridge or birch and muesli at home, which is going to cost you a fraction of that to make and have, and probably be healthier for you in any case. So there are lots and lots of things that you can do there, but you got to know where your money's going. And if you're not in a position where, if you're spending more than you earn, you've got to make inroads within your budget to cut that spending down and, controversial as it might be, get that income up either through growth within your career, and it's an essential thing these days, taking on a side hustle so that you can have more income coming in.
Totally. And I think with the budget too, the thing that really sticks out to me to add to that, AB, is if you don't have a budget, or a half decent one at least, you won't be able to save as much as you should. No. Now, if you can't save, there's two things that spring to mind for me. You can't build an emergency fund unless you save some dough, which is the foundation of anyone's financial security. And secondly, if you can't save, you can't invest. And with speaking, I guess, from experience for both of us, you can't save your way to wealth. No. The only way to do that is to invest your funds.
Quite right. And that notion of not being week to week, and I too have experienced what that's like, and I know what it's like to be on a Sunday night and it's hungry because you've got no money and you've got no food left. It's not pleasant. There are steps that you can take to push through that. Understanding where your money goes so you can spend it more wisely is crucial. The next step, as you rightly say, again covered in our book, The Wealth Playbook, is building up that emergency fund, having 1 month of bills and expenses covered in terms of saving. And if you're living week to week, that seems like an insurmountable goal. So the budget is a great way to, number one, see where the money is going. And then number two, once you see where it's going, start to make adjustments. What can I do to get more income in? And what can I do to stop as much money flowing out the door? And when you put those two things together, you're in a situation then where you do have a budget surplus at the end of the week or the month. And what do you do with that? Multiple things. Number one, work on saving that emergency fund. And once you've got to 1 month, we recommend then getting 3 months of emergency fund. You can then start paying down your bad debt so that you're not getting clobbered with interest or late fees and all that sort of stuff. And you're starting to get that breathing space where you can get your head above water. Baby steps first, though. It does start with a budget. It has to start with a budget. And it doesn't, people often have a negative view of budgeting insofar as they see it's the fun police stealing all the color of life away. All budgeting is a mechanism by which you can almost guarantee everything you want out of your life in the future by making some small short-term sacrifices today, but you've got to pay the price of admission. And again, this is if you're listening to this and you are week to week and you're going, oh, it's right for you guys, I don't have luxuries or color in my life, I'm struggling to get through. You got to say, well, okay, check out some of the stuff on the Sideline type podcasts that we've run in terms of building up a side hustle. What can you do to increase your income flow? But if you increase your income flow and you're really bad with money and you spend what you bring in, all you're doing is creating a bigger problem. And you think to yourself, then I'm working harder and I'm still getting nowhere. You've got to look at both. I can't stress how important that is. And once you've got your head above water, pay yourself first. So I have a policy where I have a percentage amount I sweep, and I still do it to this day. Each and every month, there's an amount that I sweep that goes into one of our investing accounts, and it's done before I even see any money come into my personal budget. It's already gone into that investment stuff, so it's taken care of. And then you're well on the way of building momentum. But that's further down the line. Get week to week cured by getting that budget sorted out.
Totally. Number 4, red flag. I think this is one that's less quantifiable as such, but it's a bad habit you may fall into, and that's frequently being late for payments or bills or missing them altogether. Their penalty may only be small in the short term, but long term that can really add up, and there's long-term impacts like your credit score and whatnot to consider here too as well, right?
That's a really interesting one, isn't it? You think, a day here or a day there makes no difference. And yet, if you look at companies, I won't use the name, but the number of companies that are listed on the ASX that advertise, 0% finance for a period of time. And it is until you're a day late, in which case the charges and fees that you accumulate are absolutely horrific. And really, that's your fault for not meeting the payment terms. At the same time, the level of disclosure may not be quite as clear as could be. So I guess how you do anything in life is how you do everything. And one of the philosophies, my father always installed, in fact, not just my father, my mum and dad, when it comes to money, never a day late and never a dollar short. So if you've got a bill to pay it on time, pay it in full, get it done. And if you have that as your moral frame, this notion of being late or slow with payments kind of goes out the way. And it's interesting, all all these things, if you look at them in isolation, they're tiny, tiny things. Don't spend more than you earn, have a budget, make sure you know where your money's going, have a side hustle, never be late with your payments, make sure you pay full amounts. They're all micro things, but when you layer them up, they actually are the foundations of financial well-being in its purest form. So, if you owe money, get it paid. And that doesn't mean to say you have to be in a race to pay anyone. I like to, as you guys all know, we pay our invoicing and our bills on time, every time, never a dollar short, never a day late. There are other organizations out there, and if we take the tax office as an example of that, or if you think about renewal on a vehicle for registration and things of that nature, you get your email that says you owe this and it's due by such and such dates. And if you're organized, one of the things that you can often do is just, I'll pay that straight away, which might be 5 or 6 weeks before that money is actually due. Well, that money's better off being in my bank account where I can use it for that 5 or 6 week period rather than paying it early. So I'm not into paying it early. So I'll have those payments locked in and scheduled as a BPay or as a bank transfer a couple of days before the due date, but not 5 weeks before the due date.
Me too.
That kind of makes sense.
Yeah.
And again, that's good money management, but it also requires a better understanding of where your cash flow is to make sure that when that money is due to go out, you haven't gone, I've got this bonus, which is all this unpaid tax here, I can go and spend that. And then when the bill's due, there's nothing in the cupboard. So, it does require a level of discipline to do that. So avoid paying too early. And if you do find yourself in a situation where you are struggling, and say you've got a credit card bill or using the tax office as an example, contact them and talk to them about it. The best thing you can do is do that. The worst thing you can do is ignore it, and then the penalties start to ratchet up. So, for example, with the ATO, if you are going through a tougher time, you're self-employed, for example, maybe the weather's been inclement and you haven't been able to work if you're a builder or something like that, call them and say, look, I've got an issue, which is this. Can we talk about a payment plan? And invariably, if you're on the front foot with this, you'll find that a payment plan may well become available to you, and it may well become interest-free credit in that regard too. So it's always worth having those conversations and being upfront. But the only way you can do that is if you're on top of your numbers and know where you're at. But have that conversation. If you're going to be late, contact them and say, listen, we've run into this. It's embarrassing. I've got to ask for it. Is there any way that you can help me? And you'll find most people actually quite receptive if you have that. Whereas if you ignore a demand for a bill, that's a very different perspective.
Absolutely. Don't be late. Put a notification in your journal or your calendar a couple of days beforehand and make sure the money's there. Don't spend it all, right? It's pretty straightforward.
Right. It's easy done. Money in your pocket burns a hole real quick.
That's right. Now, last but not least, the last financial red flag that we see often is borrowing money and taking out loans. Now, that may not be through traditional sources like a personal loan through the bank. It could be asking your auntie or your best mate or whatever for $5,000 or $500 here and there. It's a bad habit to get into.
It's a shocker. Firstly, when you ask friends and family for a loan, invariably there's a level of emotion that sits over it, and there may not be a contract, it might be on a handshake, and that level of accountability should be far higher for friends and family. And I have to say, I've fallen foul of this. I've lent people money before and you don't necessarily see it again. So just have a policy where it's just a hard no. And I think, it doesn't matter. It's just a no. And my learned experience tells me if you have to come to me, and I'm not a money lender or lender of last resort, it's just a good-natured friend saying, can I borrow some? It's just no. I don't want to compromise a relationship with you, a friendship with you, because you owe me money. And the fact that you have to come to me rather than the traditional source tells me you've got problems elsewhere.
Yeah.
So, the borrowing, and this is something that's interesting. When you see people start to take out a personal loan to try and get themselves out of trouble, it's not a good thing. It can actually be. I'll give you an example of this. It's something that's called debt consolidation. So let's say you've got some bad debt. You've got a couple of credit cards that you've maxed out, you're paying the minimum to try and keep the credit card company off your back, and you're digging, I'm going to apply for another card and transfer my balance and get some points and try. That's just a death spiral of problem for you down the line, because credit card debt is especially expensive because it's an unsecured personal loan, and you're going to find that you're paying very, very high levels of interest. So if that were the case, and there's a caveat on there, you've got to have some discipline and follow this process. I'm not advising you to do this. I'm telling you, if you're the right person and you've got self-discipline, which you obviously haven't to get yourself into that problem in the first instance, but if you have, consolidating all that credit card debt and talking to your bank and saying, look, I want to consolidate on a personal loan, pay off all your credit card debt. Personal loan is probably going to be at probably 60% of the interest that which you're paying on a credit card. So use that money, get your credit card paid off. You've now secured a lower interest rate. Second thing, pay the personal loan off. Don't think, oh, I've got rid of my credit card debt. Let's go. Off we go back to the races and have a great time with these cards that have got full limits on them. You got to get rid of the cards because you don't have any self-discipline on using them. Get a debit card. That's the best you're going to be able to do. And then work on getting that personal loan paid off. And that's a way of getting yourself at a lower level of interest out of a hole that may seem impossible. That's not for everyone. I'm not recommending you need to talk to someone that understands you and your circumstances before you go doing that. It is a way, however, that you can start to bring your interest payments down. That's one thing. The challenge with that, of course, is if you've got a personal loan, it's going to affect your borrowing ability elsewhere, because it will come up when banks, if you're looking to get some form of borrowing, a mortgage, of a car finance, whatever it might be, they're going to see you've got an unsecured personal loan, and so you'll be deemed as being a higher risk. So there are consequences of that. Get that loan paid off. You might see 8-10 months issue on your credit score until that loan is paid off and you showed good conduct, and then everything goes back to normal. And what you've done is taken a valuable step in rehabilitating your credit rating, because you've got tapped out cards all over the joint. Your credit rating is going to be shot anyway. So you need to start rehabbing that. And it might not seem much fun, but if you don't, the consequences for not doing it down the line are horrific again, in terms of your ability to borrow will be restricted and or prohibitively expensive. So you have to take responsibility. You can't just walk away from it. You've got to show good faith and get it rehabbed. And I think if you've got a questionable credit history, working out how you can get that cleaned up is, again, something from a moral perspective, something that you owe yourself, not the people you owed the money to, but you owe yourself, because it's a legacy you don't have to carry around for the rest of your life.
Yep, absolutely.
So there's 5 in there, Mitch, and a lot of people will have 1 or maybe 2 of them, or they might flirt with 1 or 2 of them, or maybe more. But when all those things have started layering up, if we go from sort of a very, very easy salmony pink color through to a bright crimson red, if you're at the salmony pink color, take steps now before it moves through to a deeper red and eventually becomes crimson.
Totally.
And it's the habits that go through there, because the way we do anything is how we do everything. And what got you to pink will be the thing, if you leave it unchecked, that will get you to that crimson red. And that's a very different quality of life. Mentioned right at the start, the work that we do as a business, as a team, as an ecosystem, what we do for our clients is to try and assist them in building good financial habits and living a life of financial security, not financial stress. And budgeting and money and spending and debt are all major fundamental parts of that. And if you can work on good debt, not bad debt, if you can pay your bills on time, if you can budget, not overspend, and realize that there's a bigger game of money that you're involved with here, all of a sudden that fork in the road that you might have been at when maybe the color scheme was slightly pink starts to turn green, light green at first. Then when you start to get your emergency fund, it goes a little bit darker. And then when you buy an investment property or a home or an investment in the stock market that's growing for you, it goes darker again, until such times as you're very much so far down that green pathway that life is very different to how it could have been. And I want you to remember this conversation. It's an honest and frank one. It's coming from a good place. It's not about being the fun police. It's about being able to design the life that you want in advance, and it starts with being better with money.
Totally. And I think that self-reflection is really important. This may not necessarily be about yourself. It could be about your spouse or a family member or a really good friend. So, sharing this kind of information and providing that wisdom can go a long way to helping us all do better.
Well, they say opposites attract, right? So one might be good with money and one less so. And I've seen this firsthand with a couple of clients, and it can easily be that. So, if you've got a partner that's maybe or you've got kids that are maybe not quite on this page, share this podcast with them. And the reason I guess it's good to share is that you can't be a prophet in your own land. It doesn't matter what you say, but if it comes from a third party, particularly if their intention is not personal, it's just objective and helpful. Hopefully it can help you, your tribe, and your brood move out of being in that pink and red lane into the green one. And as we said right before, if you've got a peer group of people and you're someone that spends more than you earn, I can practically guarantee most of the people you hang around with do the same thing. Find a new group of people. We'd love for us to be inside that tent with you and help you on that journey of financial prosperity.
Indeed. Thank you very much. 5 red flags, AB. There's some big ones there. Definitely do not ignore.
Wise words as always. Thanks very much, Mitch.
Thanks.
There you have it, guys. Make sure you like, comment, subscribe. Most importantly, hit the notification button, and we'll look forward to hosting you next week.